everything was going great and you had no doubts. But then you lost your job and now you're freaking out. How are you going to earn some more dough? Just listen to the Gary and Crystal Show. Your net worth was climbing 10% every year, but now the value's half and you are consumed with fear. Don't get too down, don't get too low. Just listen to the Gary and Crystal Show.
Hello, everyone.
Welcome to the Gary
and Crystal Show.
No. It's the Gary and Crystal Show.
Oh, that's right. I keep
We went
forgetting.
over this before.
Oh,
I guess it's
okay.
been a while since we did the show.
It
so
has been a
forgot.
while. So you like our new theme song?
I love it.
Yeah, I do too.
Yep.
So we
Should
actually
be on
got
the Billboard charts.
Anyway, we got a couple of requests from people that want to hear the whole entire song. So at the end of the show, you can hear the whole song. We'll play all of it for you.
And if somebody wants to check out Rob and get a hold of him or something, where do they?
You can hit our
Web page?
Yeah, and then right, because he has a MySpace.
Okay.
So on our I know on my Faith Angel 95, I think I did a on the last show I did on YouTube. I think I listed the location. I think it's Rob Newmeyer at myspace.com.
Yeah, I think so.
Okay.
So we're going to start the show off talking about banks again, kind of getting back to that. We got away from it, but we've kind of figured out that it's become important again to talk about it. Crystal did some research, and actually 26 banks have closed up shop so far this year. Here it's the beginning of March. And so she went back and did a little investigating and compared it to last year, which was no picnic either. And last year there were 17 banks. So actually this year's even worse. So it's ramping up again.
Right.
Doesn't look too good.
No, so that's something to keep in mind, because if we're in the middle of a recovery, but the numbers are not showing that there's strength, broad-based strength in all areas of the economy, there's very strong likelihood that we may end up having a double-dip recession. I have an article from the Epoch Times, and it stated, the Epoch Times.
Oh, okay.
And it stated, well, you can find out, you know how there's all kinds of articles and journals and whatnot on the internet. But anyway, this one was dated the 25th of February.
I gotta get an Epoch T-shirt.
And according to this article, there was a study done, or a report done by the Congressional Oversight Panel, and they reported that close to 3,000 banks are classified as having a risky exposure to commercial real estate loans. So that's a real concern, because there's a fear that the next downturn in the real estate market may not be the residential market. We may have seen the worst of that. The next leg down might be the commercial real estate market. You probably have heard that, a lot if you've been following the economic news, and this is just kind of, more fuel to the fire of this particular study. But according to this article, about $1.4 trillion in commercial real estate loans are due for refinancing between now and the year 2014. And that's a huge amount of loans that need to be refinanced. And at the same time that the owners of their commercial real estate properties are looking to refinance their loans, their property values have fallen on average approximately 40%. So that's a kind of like a double whammy. And then the other thing is that a lot of the lenders are saying that they're not willing to, they may not even want to refinance these loans because of the loss in property value. If they do refinance the loans, they may be looking for stronger loan to value ratios, as opposed to
sounds like a problem in the making.
It's a problem in the making. And the other thing that they're concerned about are community banks, because community banks are the ones that do the most of the commercial real estate loans, not the large banks, which is interesting. It says here that community banks make up approximately 40% of all banks in the United States, and these banks have a high proportion of their assets will be in commercial real estate loan lending, and these are the same banks that actually lend to small businesses. So that can be problematic if we're having some problems with the community banks. If there's a lot of the banks that have fallen, there's been kind of like across the board, but I know a lot of them have been community banks as well. But that's something to kind of keep in mind, because I know there's a trend now of moving money from your large banks to the community banks, and if the community banks go under, And if they're not too big to fail, then they may end up getting gobbled up by a large bank. And once again, you will still have your account with the large bank. So it's just, I guess,
You can run, but you can't hide.
Yeah, you can run, but you can't hide. It's just something just to kind of keep your eyes and ears, open.
I've heard grumblings about, banks and small business, people having a hard time getting money.
Right. Yeah, I've
So-
heard that too. Yeah, it's extremely difficult right now that the banks really just are not lending.
That's what it sounds like.
Yeah.
Well, I've got something in kind of in the same banking vein. This is an article from the Washington Times by Richard Rahm, and this is in regards to, it's called the New Underground Economy, which they call the underground or black economy. And what that refers to are people that basically aren't using banks. They estimate that 7.7% of the households in the United States, which basically contains about 17 million adults, are unbanked, which means they do not have a bank account.
Okay, so these are the people that use credit unions and things like that.
Well, those are people who just don't have bank accounts, probably just pay cash for everything. And then they say an estimated 17.9% of U.S. households, roughly 21 million, are underbanked, which rely heavily on non-bank institutions such as check cashing and money transmitting services. So those would be like your credit unions and stuff like that.
Okay.
Tax revenues are falling more rapidly at the federal and state local level than would be expected by the small drop in real domestic product. And so they're just basically saying that this is contributing. I think people are just afraid of banks right now, just like, the Great Depression. And the banks
Right.
are making it harder for people, especially lower income people. They said most of these people are in a lower income bracket, making less than $30,000 a year. And banks, I think, are, they're turning them down too. People that want
Right.
them, and I think there's a percentage of people who are afraid to put their money in the bank too.
Right.
So it's a combination of those things.
Now I have a article that kind of goes along with that. This deals with credit unions, and this is from a blog. Looks like it's Misch's Global Economic Trend Analysis, and this was taken on the 7th of March. But according to this article or this blog, it says that, and this is, and what he did, he's focused on Nevada Credit Union as an example, but this is an example of a trend that one may need to be aware of if you have a lot of your money in credit unions. But according to this article, the Nevada Federal Credit Union, they don't want cash in their accounts because they lose money on cash, because credit unions have to pay a premium, an insurance premium for the cash that you keep, just like banks do. So just like with the banking account, you have your FDIC insurance. With credit unions, you have, I guess it's what the National Credit Union Administration insurance that you have to pay. So that way your deposits are insured. And so what they're saying is that if you have only cash, if the only reason why you're using the credit union is to save money because they give you a high interest rate, then now what the credit union is saying is that we're going to reduce your interest rate to zero. So they really want you to use it for other, like for checking and,
Right.
and loans and things like that. But don't just use the credit union for saving large sums of cash. The other thing is they actually want people to take their money out. And so what they're saying is that because they lose money because they're not able to make a profit with cash deposits, because they have to, number one is they have to pay a premium, the insurance premium on the cash deposits. They can the money that they get in from the consumer, they're reinvesting those in U.S. Treasuries, which are only paying about 0.25% interest rate. And then the premium, on the other hand, I think is about 4%, not 4%, but 0.04. So already you can see that they're taking a loss. So this is not good business for them, and they can end up going out of business or having some problems if they do not change their business model. So what they're asking is they're giving bonuses. They actually would give you cash to take out your cash. So for people